begin the meeting actually by passing out the latest chart. So if anybody wants a copy of it, you just pass it along. And I'm kind of pleased with what I see here because as you can see, that precipitous fall from the high point in April seems to have now leveled off, which is a wonderful thing, and it seems to have leveled off around $730,000 to $735,000. We've had 3 consecutive weeks now of that data, and it's a good thing because it's leveling off, but also we are in the low point in terms of the holiday season when numbers historically drop off. So if that stays at around $730,000 to $735,000 for the remainder of August, and we're almost through August, I suspect that when we get into September and we start seeing more sales taking place, that number will probably start to rise, and when it does start to rise, it'll be an indication that we have hit the bottom, and that certainly if you're acting for a buyer, now would be the time to get into the market because it may be the most opportune time for them. Because if in September, as we suspect, the market will start to rise, then of course you will have missed the bottom, and the only time you know you've missed the bottom is when we're no longer in the bottom. But hopefully this chart is helpful to you in analyzing what's happened to the market over the last 3 months, and certainly helpful to you if you're speaking with a client. You can give them some indication as to where the market has gone. What I do have today, and I will talk about them because it's interesting. Even at the midpoint, you see some interesting data. Trev provided its information on August the 16th, and what we see is we see a decline of 35% compared to where we were last year at the midpoint in August. So fairly substantial, but consistent with what we've been seeing over the last little while. Not quite the 40+% that we had witnessed over the last month and a half, but 35%. Where it becomes very interesting is when we start looking at the new listings. The new listings, which had come in with a vengeance, and we were in some cases 50% higher than we were new listings the year before. Now we find at the midpoint in August that we're down by 10%. And as I mentioned at the sales meeting last week, and I'm very confident when I say this, that we're going to have an inventory shortage, particularly when it comes to condominium apartments, because whereas the overall new listings are down by 10%, in the case of condominium apartments, the listings are down by closer to 30%. That being the case, when the market starts to pick up again in September, and condominium apartments are the cheapest housing form available out there, there's going to be a terrible, terrible inventory shortage. And so I would suspect that we'll see, and this happened in Vancouver, we'll start seeing fairly dramatic competition for condominium apartments. And in talking anecdotally with some of the agents, I'm told that is happening even now, that a decent condominium apartment in a decent building comes available, there's a considerable amount of interest in it, and oftentimes there's competitive bids and the price is driven up a little bit. The average selling price at the midpoint came in at $731,000, and I noted that on the chart, so you can see the midpoint. And then Trev gave us one more week, which came in at $733,000. So that's where those numbers come from. A couple of other interesting things, and I've been trying to gauge the difference between what's happening in the 905 and what's happening in the 416. So I looked at the sales that took place in the midpoint, and then looked at the new listings that took place at the midpoint as compared between the 416 and the 905. So here's what we get. In terms of the sales, of the 2,706 sales that were reported at the midpoint of August, 40% of them were in the 416. That is a considerable increase compared to what we had seen when the market was very active and prices were rising. We saw more sales on a proportionate basis taking place in the 905 than in the 416. That seems to have shifted, which is consistent with the analysis that we did at the end of July's results, which indicated that the sales have slowed more dramatically in the 905 than they have in the 416. Are we having some technical problems? So 40% of the sales in the 416 as compared to the 905. However, when I looked at new listings, 70% of the new listings came in the 905, and only 30% of the new listings came in 416. So going back to my comment about an inventory crunch as it relates to condominium apartments, we may, as we move into the fall market, find ourselves with a bit of an inventory crunch with all housing types, including detached and semi-detached, if these numbers continue to do what we saw at the midpoint of August. So that it wasn't an anomaly, I went back to last year to see what happened last year, and sure enough, last year, almost 40% of the listings that came in were in the 416 and 60% in the 905, and this year now we have 70% going into the 905 and only 31% in the 416. So as I mentioned last week, the sales meeting, it is a very fractured market. It's not homogeneous, and as a result of that, it's very difficult to get a handle on the overall market. You have to actually drill down into the various trading areas. Now, fortunately, we trade predominantly in the 416, and as a result of that, I think we're going to be better served going into the fall market based on the numbers that seem to be unfolding through the month of August. If we look at what's happened in the 416 in August in terms of housing type, the housing type that's taken the biggest hit in terms of sales are detached properties. And I mentioned this last week, that shouldn't surprise anyone. And the reason why it shouldn't surprise anyone is because our average sale price for detached properties was approaching approximately $1.7 million at the height of the market in April. So effectively, it had reached numbers that were unsustainable, with prices going up by over 30% on a year-over-year basis. Unsustainable. So that housing type has taken the biggest hit in terms of decline in volume. Semi-detached only down by about 7%. Condominium apartments are down by 20%, but they're down, in my opinion, not because of demand, but they're down because of product. And as I said, if we don't get more product, that number will stay down heading into the fall market, and in a way that's very detrimental to the market. And the reason I'm very confident saying that is because when I look at price increases year over year, notwithstanding that the condominium apartments are down by 20%, they are the highest in terms of the average sale price being higher this year than last year, up by almost 23%. So notwithstanding everything that's happened, condominium apartment average sale prices have not only held their value, but have continued to increase. That's not the same for detached. Detached are only up 3.8%. So effectively, detached properties, because they got so expensive, gave up all their gains over this period of time that I've been charting, because they just got too expensive. And even now, a detached property in the 416 at the midpoint in August came in at $1,200,000. So you want to buy a house in 416 at the midpoint in August, that's what you have to pay, $1.2 million. So still a relatively expensive housing form. Semi-detached are up 16% year over year. And again, the reason for that is because they're less expensive than the detached. You can get a semi-detached property in the 416 for around $800,000. So affordable, and I might add, going back to my theory about how the market was responding before we got to April the 20th, is, as you know, you cannot get an insured loan over $1 million if the property sale price exceeds $1 million. So that means that in the $800,000 range, a buyer of a semi-detached property can still get a high ratio loan. They can't in the case of a detached house. So if they can't, that means they have to come up with a deposit, in the case of the average sale price for August of $1.2 million, of over $300,000. So you may have the ability to service the debt, but if you don't have the ability to come up with the requisite equity, you just can't buy the property. And that's what we're seeing. Condominium apartments are up, as I said, almost 23%. They're in the 416 almost $530,000 for the average price condominium apartment. In the again, looking at the 905 compared to the 416, prices are off even more in the 905 under the various housing types than they are in the 416. Whereas in the case of detached properties, not only in the 905 have most of the gains been given back, but in the 905 for detached properties, and it is a unique thing to see, haven't seen it in many years, the average sale price at the midpoint in August was less than the average sale price at the midpoint in August in 2016. Wow. So that's the first indication that not only have some of the gains been given up, but they actually have been given up, and now we find ourselves in a negative variance. And again, I repeat, the reason for that is because those property types are just so expensive, and they've become so expensive in the 905, primarily because of the foreign money that was there. A lot of the foreign money has dried up, so in places like Markham, Stouffville, Vaughan, you're just not seeing that kind of foreign money, particularly with respect to detached properties, which was the housing type that was most of the demand. We still have positive variances for semi-detached properties, and not that there are that many in the 905, but we still have positive variances of 20% for condominium apartment sales. So a very interesting market as it's developing as we close out the month of August. Can't wait to get the month-end result.